Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Friday, December the 8th, non-farm payrolls day and unemployment. And well, I think it was unexpected. Non-farm payrolls came way higher than the previous one, 150,000, and the consensus, the forecast were 180,000, and we got almost 200,000. I think this is a miss. And unemployment rate, remember that we want unemployment to go higher. The Fed wants that. And it came 3.7, way lower than expected. So opposite numbers in terms of expectations. I think this is a double miss, and I think market is not liking it, despite the fact that there are some pushes. I think on key levels, you will see in the technical analysis that there are big rejections. More interesting data, hourly earnings month over month came higher than expected, so more money into the pockets. That's a miss. And hourly earnings year over year remain flat, that's also a miss. Participation rate ticking higher, that's good. And look at this, for example, non-farm payrolls on the private sector, 150,000, almost double than the previous one. So in terms of NFP and unemployment, I think this is not what we were expecting and not what we want to see. At 10, we got the consumer sentiment preliminary. And oh boy, big push, 69, consumer sentiment skyrocketing. And look at these inflation expectations, 3.1 from 4.5 to 3.1. Fed always says that the consumer inflation expectations is driving inflation lower. So at the same time that people is expecting lower inflation, they spend lower. So this is realizing an expectation of inflation going lower. So this is good news. 5-year inflation expectations 2.8. In terms of consumer sentiment, this was pretty great. In terms of non-farm payrolls and hourly earnings and unemployment, this is a big miss. So where are we in terms of expectations for interest rates? So as you can see, we are pricing in flat for March. This was previously here. So we are moving towards no an interest rate cut on March, waiting for May for the first interest rate cut. And for them, 1, 2, 3, 4, and 5 to reach 125 basis points of interest rate cuts for next year, 2024. So the numbers today moved from interest rate cut on March to hold on 51%. That's quite a nuance. So now let's move to the charts, because as always, we need to see the details on what is the market doing. The first thing that I was watching was this. This is the 1 hour chart. Look at this. This is a big fair value gap on the 1 hour, and there's a lot of liquidity up here. Double top and also here. So basically, I was waiting for this 4 hour to resolve and to take this liquidity to take any shorts. So that's for the bear scenario, for the bearish sentiment. In terms of bullish sentiment, look at this. We have this 1 hour fair value gap that got tapped on NFP. And if we go to the 30-minute chart, we can see a really nice entry down here. You have to be quite confident to catch this kind of moves. The move was pretty damn good on momentum, but let's now put all my charting data on the 1 hour. As you can see, I was watching this. This is the 4 hour fair value gap, and this is a 1 hour. So we got the liquidity up here. This was the liquidity that we took recently. This is the last one, and we got a big rejection and then a big push. and then another rejection. So we are basically on the 4 hour, we are rejecting. Let's do a little bit of cleanup. So we took this liquidity, all this liquidity during pre-market. Yesterday's high was taken, and also this double top was taken. I was explaining before. So the pre-market was taken in terms of sell side liquidity during the pre-market. This was taken before the open, and then this was the big one, the one for which NFP got the dip. So once I saw this, I was looking for longs. I have an arrow here that I'm going to explain right now because that was my only trade today. And my only trade today, it's just a long after taking sell side liquidity, after bouncing from the 30-minute and 1 hour fair value gap, bullish fair value gap. This is the bounce that I took. I removed the long, but this was, as always, kind of typical. This was my trade. 2.6 risk reward ratio, 55 points for 1,000 and something dollars with only one contract, because I was basically trying to leverage all this pullback. And sizing today on a Friday, NFP Friday, I think it was properly sized. Only one contract, big move, managing my risk, and I'm pretty damn good trading on the week despite the price action that was quite choppy. So this was my trade, and now into the open, we saw this converging price action into a breakout. This breakout was right into the 1 hour fair value gap. So this fair value gap was not taken until the big push on the 50-minute. So this is the 1 hour and the 4 hour fair value gap. In here, as you can see, we moved through that and we took this liquidity and this other liquidity. That's the target for today. And once we reach that point, that was taking this liquidity on the double top. So I was waiting to see if we were going to continue rising towards this liquidity or just reject. I always mention that when we just recently took a big swing high liquidity and we start seeing this kind of thing, look at this. I missed this short because I don't like these two things, but basically, look at this. Market structure change, fair value gap, move to the downside. We didn't take this, but there was this swing low resistance liquidity on the sell side. This was a nice short, and this was unexpected. We almost took again buy side liquidity, but then we bounce again. And I don't know about you, but Friday, non-farm payrolls Friday, I'm big on the week. I don't want to trade this. I have no reason why I want to trade this choppy price action. So basically, I was just charting some things, back testing some price action, and look at this sell side liquidity that got taken. We pushed, and now big fat red candle. Watch, if you want to continue trading, watch this inverse fair value gap on the 1 minute, because I think this is low liquidity, low resistance liquidity, and we might see a retest of this liquidity up here. Who knows? But manage your risk always. Nvidia, it's quite strong today. Apple is in the green, but Tesla, Amazon, Google, I mean, we were quite in the green until something happened. I don't know what, but I started seeing some various structures. Dollar keeps pushing, and I don't like that. You don't want dollar pushing on a Friday afternoon if you are looking to play the power hour long. You don't want to see that. So we have that liquidity taken, and then we have these two. If dollar wants to push, be careful with the stock market. Russell was quite great into the open, but then as you can see, something happened along these lines that we just got berries. And I don't know about you, but Friday into the afternoon, you don't want to risk your week on a Friday afternoon. So trust me, if you are deep in the hole, leave to trade another day. If you are big on the week, enjoy your weekend. There's no reason why you want to continue trading on a Friday afternoon on NFP when we have this kind of price action. If we were just doing like standard trending action in which you can see some structures being respected, then you can, I would recommend at least watching some trades. But with this price action, I don't think it's worth. We took enough liquidity up here to really just consolidate up here and don't do this. If we do this, next week is going to be awesome. If we don't do that, we might just see a retracement as we did a lot of days during this week. So remember that next week is big. So let me just remind you about next week, Wednesday, because next week, Wednesday, it's FOMC. And we have on Tuesday, we have inflation. And on Wednesday, we have FOMC interest rate decision. So big week next week. Don't rush today on a Friday. Don't do stupid decisions. Just take your gains on the week or your losses on the week, accept them, and just refine your strategy, study on the weekend, review, journal, watch my tomorrow's weekly recap video because that's going to be awesome. And that's all. Really, I have enough experience to say that it's not worth on an FFP Friday to continue trading with this price action. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. I hope you had a good trading week. This week has been really difficult to trade, a lot of traps, but we are at the end of the year with critical economic data. It is what it is. So you have to learn to trade this kind of waters, and that's why I upload these videos for you to see how an experienced trader analyze the market and what kind of tricks and strategies we use. So thank you for your time. Remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend and see you tomorrow with the weekly recap on Saturday.